Hey everyone, welcome back to Corporate Decoder, the place where we unpack the truth behind the corporate jargon, so you don't have to. Today we're diving into a financial report that really shows us how 3 different investment funds have been doing over the past year, and trust me, there are some interesting ups and downs to cover, especially when we look at the money they managed. Alright, first up we have the FI Portfolio's Focused Equity ETF. Now this fund started up late last year on December 20th, 2024. So its reporting period is a bit shorter than a full year, but it still gives us a good snapshot of its early performance. Let's talk about costs because that's always important. For a typical $10,000 investment in this fund, the costs were around $29. That's about 0.65% of your investment. Not too bad considering many funds have higher fees. Now, for the big question, how did it perform? This fund actually did pretty well. It brought in a strong total return and it even did better than its main competition, the MSCI USA Net Total Return USD Index. The report says this outperformance was mainly because of smart choices in which stocks to buy. They did especially well picking stocks in healthcare and technology areas, but they didn't do as well in financial services and industrials. Some of the best performers for this fund were Uber Technologies, Abbott Laboratories, and Vertex Pharmaceuticals. These companies really helped boost the fund's value. On the flip side, Arista Networks, Salesforce, and Bristol Myers Squibb were the biggest drags on performance. Looking at the numbers as of May 31, 2025, the fund managed about $84.27 million in assets. They had 42 holdings in total, and their yearly fee was $210,700, all of their holdings throughout the year. When we look at what the fund actually invested in, its biggest holdings were companies like Nvidia Corp at 6.7%, Broadcom Inc. at 5.8%, and Cisco Systems Inc. at 4.8%. You can see it's heavily invested in technology companies. Next, let's turn our attention to the FIS Christian Stock Fund. This fund covered a full year from June 2024 to May 2025. For this fund, the cost for a $10,000 investment were about $74, which is 0.68% of the investment. Slightly higher than the Bright Portfolio's ETF, but still quite reasonable. This fund returned 9.3% for the year. However, its benchmark index, the MSCI World Index Net, in US dollars actually went up by 13.72%. So this fund underperformed its benchmark. The report mentions that healthcare, energy, and utilities sectors helped performance the most. Nvidia Corporation was a top holding and a big contributor. However, the fund saw some major pullbacks from companies like ON Semiconductor Corp, Leonard Corporation, and Graphic Packaging Holding Company. These stocks hurt the fund's overall return. They also mentioned that holding a bit of cash to reduce risk also impacted performance during this period. As of May 31, 2025, this fund had about $68.7 million in net assets. It held 71 different investments. The advisory fee was $427, which as we saw is 0.68% of its assets. They turned over their portfolio 19% of the time. Its top holdings were First American Treasury Obligations Fund at a large 7.1%, Nvidia Corp at 5.0%, and Palo Alto Networks Inc. at 3.4%. Again, a strong tech focus here. Finally, let's check out the FIS Knights of Columbus Global Belief ETF. This fund also covers the period from June 2024 to May 25. For this fund, a $10,000 investment would have cost about $81. That's 0.75% of the investment. This is the highest of the 3 funds, but still not out of the ordinary for a global fund. This fund actually outperformed its benchmark, the MCW Net Total Return Index. It returned 17.65%. The report attributes this good performance to strong returns in non-US stock markets, particularly in Asia, and good stock picking in the US with a growth focus. The best sectors for this fund were information technology, healthcare, and communication services. Companies like Xiaomi Corp, Broadcom Inc., and SAPC in IT helped a lot. In healthcare, Insular Corp, Cencora, and Intuitive Surgical led the way. For communication services, Netflix, Deutsche Telekom, and Tencent Holdings were top performers. On the downside, consumer staples, industrials, and consumer discretionary sectors hurt the fund. Campbell's, General Mills, and Target were big detractors in consumer staples. Ferguson Enterprises and BAE Systems in industrials also weighed it down. Decker's Outdoor Corporation was a major issue in consumer discretionary. As of May 31, 2025, this fund had about $28.2 million in net assets. It held 82 different investments. The advisory fee was 196, that's equal to that 0.75% expense ratio. Portfolio turnover was 16%, meaning it was a more buy and hold type of fund. Its largest holdings included Microsoft Corp at 50%, Nvidia Corp at 44%, and First American Treasury Obligations Fund at 4.2%. Now here's something really important about the Knights of Columbus Global Belief ETF. They announced on June 23, 2025 that they're liquidating the fund. This means they plan to close it down. Shareholders can expect to get their money back around August 1st of 2025. The fund stopped accepting new investments in July, and the last day to trade its shares was July 18th, 2025. So if you're invested in this one, your investment is coming to an end soon. Diving into some of the administrative details, we see that Cohen and Company Limited was the main accounting firm. For the fiscal year ending May 31, 2025, they billed $37,000 for audit fees and $9,000 for audit fees and $9,000 for tax fees. These are pretty standard costs for auditing a fund. Now let's look at the heart of the report, the financial statements. We have the detailed breakdown for each fund as of May 31, 2025. For the FIS Bright portfolios, focused equity ETF total net assets were 84,726, 1,476 and 479 cents E9. The FIS Christian Stock Fund had total net assets of 68,719,953 with a net asset value per share of $29.62. And the FIS Knights of Columbus Global Belief ETF with $28,173.812 EA in net assets had a net asset value per share of $29.97. Looking at the statements of operations, we can see how each fund made its money. For example, the FIS Bright Portfolios Focused Equity ETF had total investment income of $459,839,835 and total expenses of $210,195. The FIS Christian Stock Fund had significantly more investment income at $983,233 for higher expenses of $427. The FIS Knights of Columbus Global Belief ETF had investment income of $419,989 and expenses of $192,909. The financial highlights really give us the per share data. For the Bright Portfolios ETF, the total return from investment operations was 0.90 per share, and the net asset value grew from $25.E9 to $25.0 to $25.89. The Christian Stock Fund's total return from investment operations was 2.52 per share, bringing its net asset value from $27.32 to $29.62. And for the Knights of Columbus Global Belief ETF, the total return was a strong 4.41 per share, moving its net asset value from $25.83 to $29.97. This fund's performance really stands out. It's worth noting that John Jacobs is identified as the audit committee financial expert and is considered independent. This is a good sign for good governance. Scroll now for my take on all this. The S-Bright Portfolios Focused Equity ETF seems to be off to a solid start, outperforming its index, and that's always a good sign for a young fund. The Christian Stock Fund, on the other hand, has some work to do to catch up to its benchmark, especially considering its higher expense ratio, while not extreme, does put it at a slight disadvantage compared to its peers. The Knights of Columbus Global Belief ETF had a great year performance-wise, but the news of its liquidation is obviously the biggest story here. It suggests perhaps that assets under management weren't growing enough to sustain the fund, or maybe the management company had other strategic reasons. To wind it down, it's a bit of a mixed bag across these three funds, showing that even in the same trust, different strategies and market conditions can lead to very different outcomes. The strong holdings, Nvidia and Broadcom, in multiple sustained the fund, or maybe the management company had other strategic reasons to wind it down. It's a bit of a mixed bag across these three funds, showing that even in the same trust, different strategies and market conditions can lead to very different outcomes. The strong holdings, Nvidia and Broadcom, in multiple funds highlight their current dominance in the tech sector. Alright, that's our breakdown of these fund reports. What do you think about these performances, especially the liquidation of the Knights of Columbus ETF? Let me know your thoughts in the comments below. If you found this analysis helpful, hit that like button and subscribe for more deep dives into corporate and financial filings. And don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and I'll see you in the next video.